The Nairobi Securities Exchange has just closed at about 3 p.m. this afternoon. Turnover was 497 million. Safaricom was the top traded share, 7.6 million shares traded at 27.5. We had a surprise volume mover today, BAT, that saw about 200,000 shares traded at 514 shillings. And the foreigners remained net sellers, largely out of Safaricom over the day. We'll give you an update of what happened in the market later on during the show. We go back to discussing Barclays Bank, the investment case, and with us is Mr. Gift Kori, who's from Kori-Research. Just before we went for the break, Gift, you're just helping us dissect the income statement and see where the opportunities are. And I like that you brought out the element of a reduced cost to income ratio because of the efficiencies that they're running and more or less after the ABSA play. So it feels like this is more of a medium term play. Yes. So you buy it now and hold it for about 3 years.
Yes.
I want also you to help us just dissect the balance sheet, and for our graphics team, that's chart number 9, just to understand how does the balance sheet evolve? Is the business centered on lending to government, or is it actually extending credit to the economy?
I think we saw it across the whole industry that it's become very tricky for banks to actually lend because with all the risk that is involved right now in terms of pricing credit, especially on the lower end segment of the market. So the balance sheet is mainly going to grow in the foreseeable future through lending to the government. Because for banks, they would want to remain nimble, they would want to remain liquid, and I don't think that they will start lending aggressively, though they still need to mobilize deposits so that they can still be able to lend whoever it is, whether it's government or private sector. But I think they're going to lean more towards government.
Because it's interesting, I can see the customer deposits move from about 207 billion to 282 billion in 2022. So you don't look like you think management can actually mobilize deposits.
It's going to be very difficult to mobilize deposits because deposit mobilization goes hand in hand with the overall performance of the economy. And coming on the back of constrained, private sector lending, then we don't expect much growth on the SME side, who are the guys who really are supposed to push that growth in terms of deposit mobilization.
And I think maybe my final observation in the balance sheet is just, in as much as you expect a deployment of capital to the government, it does move from about 63 billion to 84 billion, but then the bulk of the assets are sitting with loans and advances to customers. That evolves from 177 billion to 246 billion.
Yes.
So,
and that's what I said, which will still drive that.
It will still,
the top line growth. And even Bodo mentioned that it's not much at 8%, but I think it's still important for the banks to lend so that they can keep the top line growing.
Perfect. Thank you for that dissection.
Gift. I just had 3 observations actually. One is that the capital adequacy ratio for the bank dropped by about 160 basis points in 2018, from 18% to 16.4%. I think this is probably largely my assessment. This is probably IFRS 9 because they were booking day one impacts. At 16.4%, if they don't recapitalize the business, I'm worried that your loan book growth projections, they will need more capital to strengthen the balance sheet because you're projecting about an average of 9% growth every year for the next 4 years. I'm not sure if 16.4% in CAR would actually sustain that growth, but that's just my observation.
And it's a valid observation.
Yes.
What I would say to that is that when we're looking at the bottom line, we expect it to contract over the next few years. But then again, the rebranding costs, as huge as they may be, are supposed, and that's the whole reason why Barclays is for parent company, Absa Africa, is going to forfeit its dividend. Those dividends are supposed to be redeployed back into the business, into the business to support that growth in terms of deposit mobilization and actually buffering the company in terms of capital adequacy. So On a
Just-
normalized basis,
Sorry,
that
Gift,
should
when you
remain.
okay, sorry, just to cut you short. You're saying that ABSA will forfeit its dividend. Does that mean that the minority holders will also have not to forfeit their dividends?
No.
Okay, it's
In
just
fact,
ABSA.
it would be important for them. That's the reason why management would want to protect
Okay.
the minority shareholders. They're
Okay.
very keen on protecting the minorities. So the minorities are not going to be
Okay.
affected in any way.
What does that mean? So if they issue a dividend, and I think here this year you expect 1.10 per share,
Yeah.
and does that mean that the allocation to ABSA will not be extended to them, but the allocation to everybody else will be given?
In a way, that's what
Okay,
I mean. It
all right.
means there are different ways of looking at it. They might actually allocate it to ABSA, and ABSA might give it back to
Okay,
them. Pump
understood,
the money
understood,
back in,
understood.
or the payout ratio could actually just go to the minority shareholders.
Okay.
So it
All
doesn't have to be.
Gift, my
That's a
second
very key
observation.
thing. Thank you for that.
So thank for that clarification, Gift. And my second observation is that the cost of capital, actually, the bank is not returning the cost of capital.
Maybe we can put up graphic number 7.
Yeah.
Graph number 7.
Cost of capital is just about 16%. The bank has been returning, in 2017, the bank returned 16%, returned 16.8% in 2018. You're projecting 11.2%, 12, 14. The bank will only be able to cover its cost of capital in 2022. Does that worry you?
Okay. That's factoring.
I'm worried about that.
You're worried about,
Yeah.
and it's you're okay.
Yeah.
It's okay to be worried about that, but
Yeah.
that's factoring in for those rebranding costs.
Yeah.
I think the cost of capital is usually around between 14 and 16%. So when you're
How do you arrive at your cost of capital?
the various assumptions that
Okay.
you take into play, and there's various methods for calculating your cost of capital.
Okay.
Yes, but
So did
it's
you use the 5-year as your benchmark and then add a country risk premium to it, or how did you?
exactly? I actually used the 10-year
The 10-year,
bond,
okay.
and then added a 6%, and it also factored in for inflation and
Okay.
the risk premium.
Okay, brilliant.
Yeah.
Thank you for that. Because I was also just piggybacking on that conversation. At 16%, yet your return on equity, it's 11.2 for this year, 12.6 for the next year. It corrects after 3 years. So then
Yeah.
how do you account for that differential and the fact that you're coming across and saying it's a strong buy, but when you compare your return on equity to cost of capital, it's pretty negative?
And that's why I even mentioned that in the report, that
Okay.
management is going to have to dig into the reserves. And that's why I started
Okay,
with
understood.
looking at how adequately funded the bank
The
is.
bank is,
So the
okay.
bank, it's clear that given that disparity between the cost of capital and the return on equity, then the bank needs to look for funds somewhere else to actually support the dividend
Okay.
story.
Okay, fantastic.
I think that's. But Kori, just my last point observation is I know that it's your average growth projection for the next 4 years is about 9%.
Is this for the bottom line or?
This is for loan book.
Okay.
Loan growth projection, which is the mainstay of the balance sheet.
Yeah.
9%. It's also sizable growth.
Yeah.
My question is, where is this growth coming from? Because I haven't seen the bank responding to rate caps. The bank still keeps singing about rate cap. They're still very nostalgic. Even in 2019, if you got the investor briefing, they still mention rate caps, right? And I haven't seen them come out strongly and say, this is, I've seen other peer banks who've come up and says, we are going to lend. Despite the rate cap, we're going to lend. But I haven't seen these guys coming out. So what's going to be driving this 9% annual average growth?
I think banks coming out to say whether they're going to lend or not is strictly management policy.
Yeah.
And even if they say they're going to come out to lend, they actually probably have figured out where those funds are going to come out.
Yeah.
I see them, Barclays has still been lending at around a balance sheet growth of around 7-8% over the past few years,
Yeah.
and that's still what I expect to see, even as the banks complain about the rate cap. The rate cap would be a good story. If the rate cap would be lifted today, would see the banks flood into the market. But
Yeah.
I have seen banks, actually other banks, raise capital from institutional funds from the
the
IMF
yeah,
to
the DFIs.
For which banks are this?
for onward lending to
SMEs?
I know Equity has a
Okay.
has a facility
And cooperative.
and cooperative bank.
Okay.
So I don't know whether Barclays has one of those facilities, but I wanted to maintain it at the normal average of what they've been doing in the past few years.
Yeah. So the lending pipeline is healthy.
It's
That's what you're
healthy,
saying.
Yes.
And even the NPL ratios are they're more or less flat at about 7%, which is okay. Let me just take a different trajectory here.
Yeah.
We're always having the conversation with George with regards to outlook or what you expect on the rate cap repeal. What are your thoughts on that?
I think, see, it's always a back and forth between government, parliament, and all these people. And it's sad that the people who are supposed to pass the law are actually quite heavily invested in it, which are the MPs, which makes it a bit of a conundrum right there. Because while the rate cap being lifted is based on the story that banks need to grow and actually be strengthened enough to actually support economic growth, especially on the lower end market of the lower end segment of the market. The other discussion is that the same banks are actually punitive in the interest rates, and they're actually hurting the small mwananchi.
All right,
so it's actually a bit of a conundrum. It's very uncertain, but we think eventually, especially with the current state of the economy, where we are seeing government saying that the economy expanded 6%, but it's actually not being felt on the lower end of the segment. So it's almost fictitious.
So we just wait and see.
We just right now it's a wait and see.
Just to let you know that I don't see it being lifted. I'm going to think differently.
I expect a revision to the ceiling, but let's wait and see. But before we leave, you must give us your sentiments with regards to the changes at the Treasury. Well, or potential changes, or whatever is happening there. Do you have any views on that and its impact on the market?
I can't speak to the fact, to the changes. I don't know who would be the best person for the job.
All right.
But it's definitely going to impact the market. We've already seen it on the local booze. It hasn't been quite significant, especially on the equities side, but we've seen the shilling come under severe pressure over the past few days. We've seen the Eurobond yields actually falling quite drastically to 7-year lows in the past days. But I also think how the government chooses to handle the whole issue will actually play a lot into the impact of this saga on the whole economy.
All right.
Yeah.
Thank you so much for this. We have come to the end of the show. So Barclays Bank, you have it at 13.1 shillings. That's the target price that Gift Kori has for this particular stock. It's more of a medium-term play. So buy the stock, hold it up until 2021, 2022 to be able to reap the full benefits, which are largely bound on the fact that the rebranding will be done and the normalization of earnings will begin to take effect then. We'll leave you with the end of day numbers for the market. See you again, same time tomorrow at 2:30. Good afternoon.